Level 1, $0. You open your banking app, $18.43. That's everything. Not your spending money, everything. Your rent is due in 5 days, your phone bill is tomorrow, and your next paycheck feels like it's already spent before it arrives. Then something happens. A subscription you forgot about charges $19.99. Your account goes negative. The number changes, minus $1.56. The mistake is tiny. The consequences aren't. Depending on the bank and account, an overdraft can trigger a fee, restrictions, or simply make the next few days harder. You call customer service, you explain, you ask if they can help. Maybe they do, maybe they don't. But here's what matters. At this level, the bank isn't thinking about your future. It's thinking about your account. Your balance is too small to generate meaningful revenue. Your transactions are small. Your deposits are unpredictable. And your financial problems are expensive for you, but barely noticeable to the institution. You're not a high-value relationship. You're a number being processed, and that's about to change. Because the moment you can keep a little money in the account consistently, the bank starts seeing you differently. Level 2. $1,000. You finally get your balance above 4 digits. $1,037. It doesn't feel rich. It doesn't even feel safe. But psychologically, something changes. You have a little breathing room. The bank sees something too. A pattern. Your paycheck arrives. Your bills leave. Your balance stays positive. And suddenly, you're easier to serve. You might qualify for better checking options. You might start receiving credit card offers. You might see higher limits as your credit history develops. But don't confuse this with respect. The bank isn't rewarding you. It's identifying an opportunity. You now have enough financial activity to become a customer they can sell products to. Checking, credit cards, auto loans, personal loans, savings accounts. The bank's relationship with you is becoming profitable, but you're still nowhere near the level where the bank starts bending its attention toward you. For that, you need something much more valuable than $1,000. You need consistency. Level 3, $10,000. $10,000 sitting across your accounts changes the conversation. Not dramatically, but noticeably. Your emergency fund exists. Your direct deposits are predictable. Your credit history may be improving. You aren't constantly fighting the next bill. And now the bank has something it can work with. Your money isn't just passing through. It's staying. That's important, because banks don't simply make money from your checking balance. They build businesses around relationships. Deposits can support lending. Credit products generate interest and fees. Investment services can generate management revenue. And the longer you remain a profitable customer, the more valuable the relationship becomes. So the offers become better. A higher credit limit, a premium credit card, a better savings product. Maybe a personal banker becomes available depending on the institution and your overall relationship. You notice something strange. The bank isn't chasing you, but it has stopped ignoring you, and then you cross the next threshold. That's when the relationship starts becoming personal. Level 4, $100,000. You have $100,000, not necessarily sitting in one checking account. It could be spread across savings, investments, retirement accounts, or other assets, but the institution can see a larger financial relationship, and suddenly, your phone rings. A banker wants to talk. Not because they randomly discovered your potential, because your relationship is now worth managing. They may discuss investing, cash management, credit, mortgages, tax-aware strategies. Depending on the bank, you may qualify for wealth management or private client services, and this is where the experience changes. At lower levels, you ask, how do I get approved? At this level, the conversation starts becoming, what are you trying to accomplish? That's a massive psychological shift. You're no longer only buying financial products, you're discussing financial strategy. But here's the uncomfortable part. The bank still wants something. Your assets, your loans, your investments, your deposits, your long-term relationship. The service may feel more personal, because the relationship is more valuable. And when you reach $1 million, the economics become impossible to ignore. Level 5, $1 million. $1 million changes the vocabulary. You may no longer be dealing with ordinary retail banking alone. Depending on the institution, you could have access to private banking or dedicated wealth management teams. And now the bank isn't simply asking, would you like a credit card? It's asking, how should we structure your financial life? Your mortgage might be discussed alongside your investment portfolio, your cash strategy alongside your tax situation, your estate plans alongside your family's future. The problems become more complicated, so the service becomes more specialized. You might have specialists for investments, lending, estate planning coordination, cash management, and credit. But the biggest change isn't the office, it's the speed. A question that once required 3 phone calls may now have one person responsible for getting the answer. You don't necessarily receive better treatment because you're more important as a human being. You're receiving more resources because the relationship justifies the expense. And now, we reach the level where the bank doesn't just want your money, It wants to protect the relationship. Level 6, $10 million. $10 million is a different universe. At this point, your financial life can be complicated enough that a normal menu of banking products isn't sufficient. You may have businesses, real estate, investment accounts, multiple sources of income, family assets, trust structures, large credit needs, and significant tax and estate considerations. The bank doesn't simply sell you a product, it starts assembling a team: private banker, investment specialists, lending specialists, trust and estate professionals. Tax professionals may be coordinated with, although the bank isn't necessarily your tax advisor. The relationship becomes centralized. You make one call, and someone else starts making the other calls. That's the privilege wealthy clients are really paying for. Not a nicer chair. Coordination, time, access, and customization. At $10 million, a bank may be willing to structure financing around the client's assets and circumstances in ways that wouldn't make sense for an ordinary customer. And then comes the next level. Because at $50 million, you're no longer simply a wealthy customer. You're becoming an institution-sized relationship. Level 7, $50 million. $50 million changes the scale of the conversation. At this level, the bank may have an entire team focused on the relationship. The client isn't walking into a branch. The branch is almost irrelevant. Meetings happen at offices, homes, private conference rooms, or wherever the relationship requires. And the conversations are no longer primarily about whether you qualify for a $30,000 loan. They're about liquidity, concentrated positions, complex borrowing, large transactions, business interests, succession, estate planning, capital preservation, and access to opportunities. The wealthy client may also receive invitations to events, private investment opportunities, or specialized offerings. But here's the key distinction. The bank isn't giving you unlimited access. It's giving you access because the economics of serving you make sense. And sometimes, the biggest advantage isn't what the bank gives you. It's what the bank can help you avoid: forced asset sales, poorly structured debt, liquidity problems, unnecessary transaction costs, bad timing. At this level, financial mistakes can cost millions, so paying for expertise can become rational. But then we reach the final level, the level where the relationship stops looking like ordinary banking at all. Level 8. $150 million. You have $150 million. You don't need a bank branch, you need an ecosystem. Your wealth may involve businesses, investment portfolios, real estate, trusts, charitable structures, and multiple generations of financial planning. The bank isn't waiting for you to click apply. There may be a dedicated team coordinating your relationship. Senior executives may become involved. Large loans can be structured around your overall balance sheet. Investment opportunities can be presented directly. Complex transactions can be coordinated across specialists. And the terms? They can become highly customized. Not because a bank has a secret button labeled "rich person," because at this scale, everything is negotiable within the economics, risk limits, regulations, and strategy of the institution. A $500 fee doesn't matter much to a $150 million relationship, but a poorly handled $100 million transaction? That matters enormously. So the institution allocates people, time, expertise, attention, and risk management. You aren't just buying banking products anymore, you're buying infrastructure. But here's the strangest part. At $150 million, the bank may actually need you more than you need it. Your deposits can be valuable. Your borrowing can be valuable. Your investment relationships can be valuable. Your network can be valuable. Your business relationships can be valuable. And your decision to move assets somewhere else can have consequences. That's why competition becomes intense. Multiple institutions may want the relationship, and the conversation can shift from "here's what our bank offers" to "here's what we can build for you." That's the final transformation, the real lesson. Now go back to the beginning. $0, a negative balance, a small mistake, a fee, a phone call, a long hold, a feeling that nobody sees you. Then $1,000. You become a customer worth selling to. $10,000. You become more predictable. $100,000. You become worth managing. $1 million. You enter serious wealth management territory. $10 million. You receive a coordinated team. $50 million. The relationship becomes institution-sized. And at $150 million, the bank isn't simply servicing your account. It's building a relationship around your financial life. But remember what actually changed. Not your intelligence, not your character, not your worth as a human being. The number changed, and the economics changed with it. That's why wealthy people often don't ask, "How can I get richer?" They ask, "How can I become more valuable to the system?" Because once your assets, income, credit, business, and relationships become valuable, the financial system starts competing for your attention. And here's the lesson you can use long before you have $1 million. Don't chase the treatment. Build the position. Build an emergency fund. Protect your credit. Increase your income. Invest consistently for the long term. Avoid expensive debt. Keep your financial life organized, because the goal isn't to make your bank impressed by you. The goal is to make yourself financially independent enough that you don't need their approval. And that's the irony. At $0, you're trying to get the bank to say yes. At $150 million, you get to decide which bank deserves the privilege of serving you. The bank didn't change. You changed the value of the relationship. And once you understand that, you stop asking how wealthy people get treated differently. You start asking the more important question: how do I build enough financial strength that I no longer need to be treated differently at all?